Welcome to Bears in Exile. Today is Monday, April the 22nd, and this is a quick hit on the indexes. Starting off with the Dow. So, minor day up, nice. Getting back outside the long-term moving average bar, higher close than yesterday, and no lower low on the tail. All good. Hanging still above the major price consensus level. At first glance, you would look at this and say, hey, we are ready for bounce. Maybe. We have the daily, which has been in decline for the past week or so. And today, we have a pretty decent, blip on the MACD histogram. Wouldn't be surprising to see it turn up. The MACD still pointing down, the RSI still pointing down, but we're starting to curl on the fast stochastic, the CCI, and that's it, with the long-term moving average bar as support. Overall, not a bad place at all to bounce. Indicator-wise, position-wise, candle-wise, not bad. The 14-day RSI moving average is still in descent, so a move up from this point would be a secondary reset, after which time it should finish off to the downside. So all of this jives. I think it's all pretty decent all the way around. I don't see a breakdown at this moment, but let's take a look at the 60-minute time frame, see if there's anything special, see if we're due for a bounce. And yeah, 60-minute. We have the 14-day RSI moving average curling up for essentially the first time in a few days. The stochastics are already high, the CCI is already high, the RSI is a little above 50. Going up on the MACD histogram. So, does this look bad on the 60? Actually, as soon as it gets a reset on the stochastics and CCI, the 60-minute looks great for probably some decent movement up. So it could be a little bit of a pause, could be a little bit of down, and then the bulls should have their opportunity to make themselves known. So 60-minute look bad? No, I don't think so. Needs a little bit of time, but I don't think it's bad. I think that jives with the overall daily. And we've been saying that the Dow Jones transports seemed and should precede a move to the upside, to the downside, etc. Here on the daily for the transports, I don't think it looks bad really at all. You can see we do not have positive divergence. Hey, I got that one right tonight. But we are finally curling up on the MACD itself, going up on the RSI, the CCI, the stochastics, and the 14-day RSI moving average is very low. So a bounce from this area, yep, totally natural, and should give the Dow all by itself some lift. So something to add to the good column for the Dow. And going on for SPX. This one actually is weaker. Yes, it is. I'm not nearly as impressed by SPX. So much more room to move on the 14-day RSI moving average to the downside. The secondary corrective move is more jumbled and less conviction. So I'm not as big a fan of this as this, but I guess we'll see how it pans out. It certainly has gotten back above the long-term moving average bar. It even challenged the upper price consensus level today, piercing it. But I think the Dow actually has more room to move up than the S&P does. Kind of strange. Moving on to the VIX. Very interesting. We once again were not able to hold the 200-day moving average. We did get a pierce on it. It is just an ugly candle. We do have a blip for a bottoming area in the heat map. I think that this one does have some more to go to the downside. I'm going to clear out here. The question becomes, we have the CCI, the stochastics, The MACD and the MACD histogram all pointing down, the 14-day RSI moving average still pointing up. Is there enough time for this to reset the secondaries and then go up to meet the 14-day at the top? I'm not sure. At this moment, I would say no, and this looks more bad than good. But I guess stranger things have happened. At this point, if it can hold the major price consensus level, I would say that bears are doing extremely well. So for me, as long as it doesn't break, what is this? It's about just shy of 13.4. If they're able to do that, I think that they'll be set up really well for a further run to the upside. I'm going to look at the 60-minute. I had put on the daily running thread about the 60-minute VXX being a really nice setup. And here we are, 60-minute, and I think it looks great. Yeah, you could look at this and say, oh, it's going to set up for a head and shoulders. This is not a head and shoulders at the moment because, of course, the left shoulder is higher than the right shoulder, which is totally wrong. But we have positive divergence in the MACD histogram. We were massively low on the RSI, very low on the CCI, positive divergence. We are very low on the stochastics, both the fast and the slow. And we only have the 14-day RSI moving average, which needs to catch up to it, join it, and begin a move up. Should be a very strong move up. So just a little bit of time needs to transpire here. But this is a very good setup, especially if it can hold this previous low, just shy of 14. I know the major price consensus level is, over here somewhere, but if it was going to be really, really optimal, that would just be picture perfect to hold this low when the 14 is at the bottom. Anyways, we'll see if it happens. Either way, it has some room, but not bad. If we can get another lower or a higher low, then we are in a triangle, and it will break out one way or the other. We should have a good indication of which way as we get closer to the end of it, assuming we stay inside of it. And there it is. A little bit messy, but there it is. And IWM for the small caps, assuming I can find it. And here we are. Not bad at all. Huge tail here. It's not at the bottom of a possible range, even though it's a hammer. Look at the long-term moving average bar. Whew. It's about to start touching, which is a really bad sign in the medium term. Short term, it still has a little bit of strength to lend. But we're moving up on the histogram, the RSI, the CCI, the stochastics are ready to go up. The 14-day RSI moving average pretty darn low. A bounce from these levels, no problem. No problem. I wouldn't think. I don't know how far it can go based off of SPX not looking so hot, but the Dow doesn't look too bad, so I would give this one easily another ability to make another lower high. No problem at all with that. Going on to SPY for our volume information, see if there's been any development on that front. It's been very just fascinating lately. And look at that. Remember we've been saying unbalanced volume, want to trust it, but can't. And once again it moves up, going right up to the trigger line. So at this point, it's either going to fail the trigger line or it's going to move back through it. And that's pretty much all she wrote. We're still in the danger area with the volume-weighted MACD. Very, very close. And now even leveling out on the dual volume flow. So there are some warning bells going off in my head. I want to play this very carefully. Take it slow, have some patience, and get it right. That's the most important thing. So at some point we're going to have just a huge confluence of information. It's going to be an easy swing trade one way or the other. And for the moment, it is just happy being frustrating. And that's it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.